Hello and welcome to the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday the 5th of March 2023, and if you're a novice, you're going to find this session really interesting because we're going to be talking about a whole bunch of things. If you're an expert, then this is an opportunity for you to come along and share some information about what you're working on and things of interest to you. Generally, these sessions are open to everybody. We run them every Sunday evening, 7 p.m. till 8 p.m. UK time. There are details on how to join in the comments below. Sessions, as I say, are open to everybody, whether you're a beginner or an expert or an intermediate. And we don't have a fixed agenda. We talk about whatever the audience want to talk about. So some weeks we talk about DeFi, NFTs, ICOs, STOs, TGEs, any three-letter acronyms really. Some weeks we'll have a conversation about blockchain or about crypto security, about encryption, and any other topics that are of interest. If you'd like to come along to a future session, as I say, do click on the link below. Do make comments on this video, click on the like button, click on the bell button so you get reminders of when new videos are published. We do record these, we publish them every week. There's over 100 videos now that have been produced on these catch-ups, so lots of useful stuff in there. So with that, let's see who's going to come and join us today. Hey, Martin.
How are you?
I'm good. And as is, you've joined us as well. How are you today?
Yeah, not too bad. I thought today I joined. I will see your link, so I'll join today. I've got a bit of free time, so I thought might as well, why not?
Cool, excellent. Well, I think both of you are new visitors to the sessions, really. So hello and welcome. Thanks for coming along. Sorry, I just lost the audio for a moment when I was saying that. Yeah, we never know who's going to come along to these sessions. They're open to everybody, as you've probably both seen. I stick some comments on social media, stick them on WhatsApp and Telegram and Facebook and a few other places as well. Open to anything whatsoever really to discuss. So I don't have a fixed agenda in terms of wanting to cover certain topics or anything. It's really up to you folks and whoever else joins us. So maybe a starting point, a really useful thing is, who are you, where are you from, where are you based, what's the interest in the session?
So I do crypto full time, and I actually run my own Telegram channel. You guys probably know. I try to share basically like a daily digest of all the crypto news once a day. I've changed it. Before I used to try to share news as they come, but now I just try to save all the links throughout the day. And in the morning when I wake up, get on my laptop, I basically just make a whole list of links for everything important. So people that need to get up to date with all the news, they can just read that one post and they'll see all the important stuff. And then recently I also launched my YouTube channel. So I try to go into fundamentals of different projects and just share my experiences really, because I've been in the space since like 2015. So I've got a bit of experience and knowledge that I thought I'd share with people. So I'm proud to that. I just done like tech jobs. My background is in like retail and tech. So I've worked for like Sony, Samsung, some of the companies and some of these retail stores in London. So yeah, that's basically me.
Excellent, thanks. So if anyone wanted to join your Telegram channel about activities, how would they go about that?
I could probably send you the link.
Yep.
How can I post a comment here? Yeah. Post it in the chat.
Yeah, I was going to say, if you stick it in the chat, and I'll include it in the recording of the session as well. If that's okay for
Sure.
people to join in.
That's my Telegram channel, and I'll give you the YouTube as well. That's all right.
Yeah, sure. No problem. Because what I find is a lot of people do say, how do I keep up to speed with what's going on? And I subscribe to a few channels and that, but if you run one yourself, then this is a great opportunity to promote it a bit. So cool. Yeah, I'll promote that and also stick in your YouTube channel as well, and we'll get that for you. Yeah. That's fantastic. Martin, the same with yourself, really. Where are you based? What interests you?
Yes, thank you. I'm based in the UK, Peterborough, actually. I come from digital marketing background, and not so long ago I got really interested into cryptocurrencies, and it's still a learning journey for me.
Yeah.
But I've been putting so much effort, and I've been digging deep and learning and thought to see where I can network with like-minded people.
Yeah.
And
Did you come on the call a couple of weeks ago, Martin? Have you
Pardon?
been on before? Have you been on one of these sessions before with me?
no, this is the first time. I don't know what to expect.
No, that's great. It's just there was somebody else on from the Peterborough area a couple of weeks ago, and I just thought, oh, maybe it's someone who I'd forgotten. Well, welcome to Aziz. Welcome, Martin. It's fantastic. We've been joined by JT as well, who's a regular and he needs no introduction. Always got lots of interesting stuff to talk about, and Sebastian as well. Hey, Sebastian.
Hello, Gary. Hello, everyone.
Hey. Good evening and welcome to this evening's session.
Thank you very much. Back after a break, and I've got some sort of disappointing news about my Ethereum.
Okay.
Which is that I took the leap before the merge, where the Ethereum was going to move to the new proof of stake system, and absolutely nothing happened.
Yeah, I think that was a great example of how it is that the news is baked into the price of things, and so because everyone knew that was going to be the merge, I think the market had already acted and behaved before the actual merge happened. So yeah, it was a bit of a non-event, wasn't it?
Exactly. Yes, it was like no difference in the price, and all the media went silent. It's like building it up for months and months, and then it happened.
Oh, excellent.
But
So
it's a positive thing. It means that eco-friendly cryptocurrencies are a thing now. They exist, which is great.
Well, I think that's the big benefit, really, that a lot of people haven't picked up, is because Ethereum switched to proof of stake, which, as you say, is much more economical with its use of energy. It means there's less of an excuse with people saying, oh, you know, I can't buy an NFT or I can't buy Ethereum because all the polar bears are going to lose their homes because the South Atlantic's going to melt or whatever. So it kind of gets rid of that. So that's great. Fantastic. Well, thanks for coming back again, Sebastian. Nice to hear you again. Been joined by Jag as well. Jag, I know who you are, but say a few words. Where are you based? What's your interest in crypto? That's just
sorry. I just realised I was on mute. Sorry. Yes, I'm based in West London, Greenford. I got interested in crypto some years ago, pre-pandemic, when I used to go to the meetings with Gary and was it Marlow?
Yep, that's right,
Marlow.
Marlow.
Right? Yeah.
But Buckinghamshire, hence Buck's Crypto Club.
Yeah. So I'm just trying to get back into it, really.
Cool. And is there anything in particular, Jag in particular, for this evening that you're keen to listen or learn about or share or anything?
My brain is like a sponge, so I'm open to. And if my voice goes, sorry, I've been quite ill recently, so just as well as a Zoom thing, because I don't want to pass anything on to anyone.
Cool. As long as it's not infectious across the internet, that's good. I've been joined by Elena as well. Hey, Elena. She's an absolute stalwart. She's a star who knows far more than she'll ever admit to. And I love Elena coming along because she always asks really, really interestingly different questions. As you might discover this evening, we'll see how it goes on here. But JT, JT, you're being quiet this evening. Are you travelling at the moment, or are you at home?
No, I'm in London, but from next week onwards, on the road for 1.5 months. So,
wow, is this all with a road show with one of the projects you're based in?
Not roadshow, all different types of things, business meetings, speaking at conferences, all sorts of things, really.
So I guess the question for anybody really at the moment, because there's loads of conferences on at the moment. There's the Ethereum Denver conference. There was the Mobile World Congress at Barcelona, which seems to have more and more a crypto thing. Has anyone heard of any interesting events or been to any interesting events lately?
Well, I think somebody just touched earlier about Ethereum. So, once again, they decided to delay, It's gone to April, Shanghai, and there's a lot more into it, in my opinion, but it's just my opinion, There's a lot. I mean, it looks like I can't remember the exact number, but it's like something like 15 or 18 billion stake that is going to be unlocked. You know.
So JT, tell us a bit more for those who aren't so familiar, because I admit I've not been following Ethereum for a while, but
So
I do.
You probably have heard of the merge, yeah.
Mm-hmm.
So this is kind of one of the final steps. Yeah, it's been already on testnet. It went well, okay, and they were in February, and they were supposed now to do the final part. Yeah, which is to actually move it to mainnet. And with that approach, with that they moved to mainnet, means that the people that have staked Ethereum, when they start to go all the plans for version 2 that needed people really to stake, then all of that Ethereum has been staked since then. Yeah, it's been going for a while, for a few years already, you know. So that and staking, which I can't remember the number, to be honest, you know. If anyone is near the computer can probably check it out, but I think something like 15 or 18 billion, you know, and that's going to be unlocked, you know. With that unlocking, we don't know what to expect. Are people going to sell it? You know, if they sell, oh my God, you know, if a lot of people sell, it could very quickly go very low, Ethereum, you know, really, really low. So hopefully not.
But I was going to say, because that's been hovering around about $1,560 for a few days. And I don't know, Sebastian, you're probably closer to this with saying that you're hoping for the merge to have some action. Are you familiar with any activity going on Ethereum price-wise of interest?
Well, it seems to be quite stable recently. It's gone down 10% since, when I initially converted Great British Pounds into Ethereum via an exchange. So that's not a major difference compared to the drama of, say, Bitcoin a few years ago.
Because I've just pulled up on the screen now for people to see the ETH against USDT, which is probably the easiest way of showing it. And it does seem fairly settled, as I say, around about the $1,600. And it's past the peak that it had over a year, or I guess nearly 2 years ago now, where it was like $4,800. So to me, there doesn't seem to be much activity going on. So I just wonder, is it, as JT was talking about, the last bit of the merge, is it another example where the price is baked in, or sorry, the news is baked in, do you think, to the price?
Nobody knows, Gary, yeah? People can tell you whatever they want, but nobody has a crystal ball. It's just the unlocking of that so much Ethereum. It could go either way, you know. If people don't sell, then a lot of people start to buy it, you know. But if some start to sell and panic kicks in, all of that Ethereum that is being staked could just end up in the market very quickly, you know. And without many buyers, it could just tank. So we don't know. Yeah,
I was going to say, because I noticed it kind of fell off. It fell off a cliff on the 3rd, but that was when Bitcoin lost a massive amount as well.
The top 50 tokens had the same drop, you know. So I won't say too much, because if you look at the charts of liquidations, there was about 284 million in liquidations in 24 hours when that happened, you know. So that's just probably bots just, you know, doing the usual stuff, you know, going after longs and shorts, and they're moving up and down constantly. But what I'm saying is totally different, Gary. Is you know, in April is going to be unlocked, all of that Ethereum, and it doesn't matter what you and I think. Yeah, we don't own that Ethereum. You know, I have no Ethereum. I don't know if you do, but you don't know what people are going to do, isn't it?
Yeah, and I guess it's one of those things. It's the old standard economics 101 that an increase in supply without an increase in demand, unless you throw in elasticity and this kind of stuff, will tend to lead to a big price drop. But, you know, as I always say, I should have across the top, this is not financial, legal advice, whatever type thing. So, we
all know that, Gary. But it also something that happened on Friday, which is quite weird, more or less same time, was the rumors around Lido, you know, LDO, is the token that they're going to get they're going to be served the Wells notice. Yeah, there was some YouTuber that dropped that bomb, and it went down very quickly to about 20%, of the price on Friday.
So what was that again? Because
Lido, LDO token.
Okay.
Lido, I think it's Lido Finance or something like that. Yeah. So there was quite a few things that happened around Friday, and then people reminding that the MTGOX date for you to claim anything is 10th of March as well. And there's so much at the moment, so much fun. It's unbelievable, how it works.
Because I know certainly there was a fair amount of interest in Silvergate, who are the New York bank, with Binance, I think it was. But I did sense that was an overhyped thing, that was simply the New York regulator was doing something.
Well, Silvergate is in trouble. Okay?
Yeah.
Serious trouble. Yeah, very serious trouble. So it's probably going to end up in bankruptcy. You can read a lot of news about it, and majority has actually been true, has not been FUD. Yeah.
Okay.
So
I am just always cautious about any crypto news these days, given you've got the things that we know that have happened, like FTX and SPF and Three Arrows and all sorts of others. But you keep hearing that there's always talk about, Binance is going to be next, Coinbase is going to be next, blah, 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 blah type thing. And a lot of it is just fear, uncertainty and doubt. And some of it might be real, but you just don't know. So, okay, well.
I used Coinbase for my, to convert pounds into Ethereum initially. And they did strike quite a sober exchange. Mm. They weren't promising the earth, and I think that's probably a good sign.
Yeah, I quite often recommend for people who are coming into the crypto space Coinbase because of its robustness, and apart from Coinbase Pro, its basic interface meant it was relatively simple to use for people. So it was always quite good on that. So it always felt like it was designed by someone who knew what they were doing, unlike some of the exchanges, I guess.
Yeah, the thing is with Silvergate, there was a lot. Look, they were providing really the payment network for exchanges, yeah, and a lot of the exchanges used Silvergate just to flow money between them, even. Okay, so middle of the week, I can't remember exactly which day, they delayed the publishing of their annual 10K report, yeah. So people start to come out, a lot of people with the FUD, further unreported losses, because they already announced themselves that, they had about 1.9 billion in losses because of FTX and many other things around that, yeah. So they were quite close with FTX at the time. Okay, so they lost a lot of money. I think it was 1 billion actually losses, yeah, for them just on FTX.
Okay.
So there was quite a lot of things that happened around, not just the regulators, but as well them failing to release a few things. Yeah, so that scared the market a lot last week.
So I guess it's one of those things that there are always things happening, whether it's regulatory, legal, or whatever. It is just a matter of keeping an eye on it and seeing what's going to happen next time thing. Okay, really useful background. Thanks, JC. I wondered then if anyone, particularly the people who've joined for the first time or the first couple of times or whatever, any questions or any comments that they'd like to throw in before we carry on with anything else?
Yeah, I just wanted to say, so there's a really good tweet by this guy called Miles Dutcher or something, and he says the 5 major crypto headwinds alarming the market right now. So there's the Mt. Gox 142,000 BTC, then the Shanghai update, which allows obviously the stakers to unstake, then the Silvergate, and then macroeconomic shift, and then regulatory clampdown. So I think a lot of this is happening, obviously, because it's happening at the same time. Obviously, it's creating a negative effect on the market. But sorry, I just got a phone call. I'll just cancel that. Yeah, so I don't know why everyone's calling me now. But yeah, so I think obviously no one knows if the market is going to go up and down. But the way I think of it is, do you really think from now till the halving? Because historically, near the halving, we've had a pump, right? So do you really think from now, which is like a year away from the halving, we're going to pump until like the halving pump? I don't think so. Historically, that's not what has happened. And we know this market is, you could call it manipulated, or the whales control it, right? So I think if you're a whale, what would you think? You would want the market to crash at least one more time so you can get on in the dip and then ride the wave, right, to the bull run, right? That's what a whale would want to do, right? And so me personally, what I've done, I've cashed out some of my portfolio, like 20%, probably a bit more, and I put it in stables, and I'm just waiting for another dip. Now, on the off chance I'm wrong, I still have 70% in the market, right? And so it's just, I look at, like a lot of people think like stable coins is like, it's a different asset. I look at it as like another crypto, like in the sense that at least that portion of your portfolio doesn't go down, right? With crypto, yeah, it could go up a lot, but if you're thinking there's a potential dip, at least 10-20% of your portfolio in stables gives you that safety factor. Matter of fact, when the market's going down, I'm happy now, because I'm like, okay, let it keep on going down, and then once maybe we hit 20k BTC or maybe 18k or something, I'll start DCAing in. So like Solana, maybe 18 is a good, you know, risk to reward, or 15, you know, you DCA into your coins that you have, right? And so I think, like, I don't know who said it, but basically you can't predict the future, but you can at least react to what happens, right? And so that's the best thing to do, is just position your portfolio according to what might happen. Now, on the off chance that you're wrong, you don't always anyway want to be 100% in crypto anyway. Like all the biggest traders I know, or like the whales that I know, whenever they think the bear market is coming, they just go straight into stable coins. This hodl mentality will get people wrecked. You know, like hodl. Next thing you know, your portfolio is down 95% plus, right? And so that's just one thing I want to mention. The other thing about what was it, the Silvergate bank, I think that's actually quite bad as well, because a lot of exchanges were using them, but Coinbase already announced that they're using another partner. They're replacing Silvergate. So although it's bad for Silvergate, but I don't think it's like I don't think it's a systemic risk to crypto alone, because there'll always be new competitors starting that would allow you to have that fiat on ramp. Like we've got ramp, you got there's quite a few. Obviously Coinbase is known because it's got that exchange element to it, but I think what needs to be discussed along with the problems is the solution. So for example, I try to teach people as much as possible. Obviously newbies, you know, Coinbase, blah blah blah, but I try to teach people like there are exchanges, decentralized exchanges. Matter of fact, there's cross-chain decentralized exchanges as well. Like you can go from one chain to another chain. Yeah, there's fees and whatnot, but it's completely decentralized, as in there's no middleman, there's no KYC. There's an exchange called Rango, and there's another one called Multichain. And even DeFi Llama recently launched their EVM compatible. I think right now it's on Ethereum, but they plan to add other chains. But you can literally go from like Polygon to Solana, or Polygon to Avalon, like literally cross chain. Yes, there's fee because you pay the fee on the blockchain, but the exchange doesn't add extra fees on. So these kind of things, like we can actually start educating people, because we know, like for the foreseeable future, you know, the regulators don't like this industry for obvious reasons, right? And so like this is not even a thing about just trying to, you know, because you're money laundering. Like privacy is just a general right of a human being, right? Privacy. And actually just remembered, I don't know if you guys know about the whole tornado cash thing that happened. One of the developers got put into prison. Just today, there's a news came out. I actually posted on my Telegram. Amin Soleimani, I don't know if you guys know, he's a developer of another crypto project called Spankchain. He's one of the OG Ethereum researchers. And he actually launched another variant of this tornado cash. It's called privacy pools. So it's quite interesting as well, because now there's a new way of like adding privacy on Ethereum, like how basically the way tornado cash work is basically a similar way, but they're trying to make it more friendly for US investors, because tornado cash addresses got added to OFAC. And so I think this kind of solves that problem. So yeah, that's just what I wanted to mention. Literally, there's a lot of things on my head.
No, that was great. That's fantastic. So in the spirit of education, which you mentioned before, one of the things you started off with was about Bitcoin halving. And I'm conscious straight away that not everyone knows what halving is. So I was going to quickly explain what it was and show what the impact is on the price as well. So for those who aren't aware, you know, a cryptocurrency is based on a blockchain. The blockchain has blocks of data that are mined. So this is where all the miners get together and have a competition with each other to solve a puzzle. In Bitcoin's case, every 10 minutes. And the reward they get for that is some Bitcoin. So it started off originally with every 10 minutes, a Bitcoin reward would be 50 Bitcoin. And then 4 years later, it dropped to 25 Bitcoin, then 12 and a half. So every 4 years, the reward that a miner gets for doing the mining halves, okay? So that's why it's called halving. Now, that is a known fixed thing of the Bitcoin protocol, so it is predictable. And this was where straight away it comes back to my point that quite often news and knowledge is built into the price of something. So if we take a look at what actually happened to Bitcoin's price every 4 years, and I've just pulled up on screen, hopefully you can see that now, that we had it in 2012, the year before the halving, which I think actually took place in 2013, the prices kind of drifted up for a while. And then you had the halving, and then after the halving, they leapt up, and then they dropped down, and then left up. And if you actually look at this chart, there's no actual real discernible impact. So a bit like Sebastian was saying how it was, Merge didn't seem to make that much of a difference. My thesis around the halving is because it's so predictable, then it gets built in. It's not as if it suddenly comes in as a surprise of, oh, supply's halved, whatever. But people may analyze it in slightly different ways. But my kind of general thinking about the halving, which, as I say, happens every 4 years, it's pretty predictable about when it's going to happen. And it comes back to the old economic theory that if you reduce supply and increase demand, or you reduce supply and you don't decrease demand, then that should normally lead to a price increase. And so if there's only half as many Bitcoins being produced every 10 minutes, you would think that would lead to an increase in the price in some way, but it doesn't. Jag, you had your hand up a minute ago. Sorry.
You've answered the question. Thanks.
Great. Okay. So in terms of the halving, I would kind of my sense is that it doesn't have that much of an impact on the price. And I think I saw a similar thing with Ethereum when that was doing it. Now, the really interesting bit is Aziz mentioned about Tornado Cash and privacy coins. So for those who don't know, again, another education thing, my understanding is that Tornado Cash acted as what's known as a mixer. So it allows you, if you think about it, if you buy and sell something using, say Bitcoin and a Bitcoin wallet, then the wallet address is written to the Bitcoin blockchain, and it's completely trackable in that you can see what other activities have happened to it and where the crypto has come from and gone to and that. If you can then link a Bitcoin wallet address to a person, which is what most crypto exchanges, most centralized crypto exchanges can do now, because they do KYC checking to make sure you're a valid person and that you're not some sort of money launderer.
KYC?
KYC is know your customer.
Right.
So it's typically at least two phases. One is prove that I am who I am. So, prove that I am Gary Nuttall by doing a selfie and sharing a photo ID or something. So that proves the identity. And then validating, again, I think Aziz mentioned the OFAC list. OFAC, I can't even remember what the letter stands for now, but I think it's run by the US Treasury. And it's a list of sanctioned countries, companies, and people. So if you want to deal with people in, I think, North Yemen might be a problem area, certainly Ukraine at the moment, Russia, this kind of thing, then they have what's called the OFAC list, which is kind of like a blacklist of who can and can't, or certainly who can't do things. So the things about using cryptocurrencies openly, like Bitcoin, is that they're fairly traceable, trackable, and you can limit them in some ways. If you've got something called a mixer, what that does is it takes the crypto that you have acquired, puts it into a big pool, and then slices, dices, segments it, whatever, before it then redistributes it. So if all of us have got a bit of crypto, and all of us put that bit of crypto into this pool, then you don't know which bit was Gary's and which bit was Aziz's and everything. So this is a mixer. And Tornado Cash was a protocol that provided for that, which the US government didn't like, because obviously you're obfuscating the identity of transactions. And so, as Aziz mentioned, I think they arrested somebody in, I think it was either Netherlands or Belgium, one of the developers behind it, saying you're engaging in something that could be considered criminal in some way. Even though technically they may not have been breaking the law, it was the fact that they were providing a facility that would enable the law to be broken, kind of thing. So that's my kind of thing.
It was a developer.
Yeah. So you're right in terms of like privacy coins are getting a lot of scrutiny. So if you look at things like Monero and Zcash, which are privacy coins, they're designed to obfuscate your identity up front. There's a lot of interest in them. I don't know, have I missed anything on that? Was that clear to those who didn't know what they were? And did I explain it correctly for those who do know what it is?
Yeah, I think that was a very good description. I didn't know what mixing was before, but it doesn't seem like the author of Tornado Cash was, there's any news about him beyond his arrest. So that could mean any number of things.
Yeah, and he wasn't he was just one of the development team. So this is where it kind of gets a little bit weird, isn't it? Yeah.
He was just a developer, nothing else. The guy was not involved in illegal activities. They can't prove the guy was doing illegal activities. He was not charged with doing illegal activities, apart from creating some software that enable others to do illegal activities.
Yeah.
And this is the big discussion now, Gary, which is, look, if I have 50,000 Bitcoins, in a wallet, and I want to send you, I don't know, 500 quid because you've done some consultancy for me, you're going to know that I have 50,000 Bitcoins. So that's dangerous for me, know? So there's all sorts of discussions that if I want to send money to other people, I don't want people to know how many Bitcoins or Ethereum I have, So there is a big discussion on that. And there's a few other people working at the moment in solutions for that. I think Aziz mentioned one of them, creating different pools and, but again, you need to then do KYC. Somebody will know that you have those 50,000 Bitcoins. So there's a lot of conversations around this. Everyone, I think, including the exchanges, and believe it or not, even Binance and CZ and so on, they're very pro in helping law enforcement, but there are the other side, about privacy. People need privacy, Yeah,
and it is one of those interesting things that, and this is where privacy really kicks in. If I'm undertaking a transaction with somebody, the person involved in the transaction doesn't need to know how many Bitcoin I've got. What they need to know is that I've got enough Bitcoin to pay for the transaction. So it's a little bit, when I go to a shop and I buy a packet of crisps, the shop doesn't get to discover what's in my bank account. They don't need to know. They just need to know I've got enough money to pay for a packet of crisps. And so JT's right. The whole thing around privacy on that is kind of really interesting. And this is where you'll quite often hear law enforcement, government, regulators saying, oh, you don't need privacy, just be totally open and transparent. Only bad people want privacy. And you go, okay, so how much is in your bank account? What? You don't need to know that? No, exactly. So
yeah. I mean, we've been discussing this for a while, and I'm involved in security, as you know, and it's always this discussion that they always try to say that so that it justifies what they are doing, which we all know, which is they always they want to have access to everything that people do, say, we don't need to have this conversation here, but my argument is, one of them is like you said, the other one is, when you enter your home, you always close your door of your house, don't you? Yeah. So when you go to your bedroom with your boyfriend, girlfriend, wife, husband, whatever, you close the curtains, don't you? So people should care about privacy, always, A lot of times they remove your ability to actually do something about it, You have no choice. It's like, what choice do you have on a video conferencing tool or a chat app. They take the data from all of them. Every single one of them, ends up on a government server. So people don't have a choice, but people care about privacy, or should care.
You're not saying that WhatsApp messages are accessible to people to publish in newspapers, are you?
Or video conferencing calls like this one.
Exactly.
So for everybody to know, if you click on the record button, on any video conferencing, any guy that understands a bit about cybersecurity can intercept this call, because it's impossible to encrypt anything that is being recorded. Impossible. There's no technology that allows current video conferencing calls of voice to be encrypted while you're actually doing it, recording it. It needs to record to go somewhere, either to memory on a server or to a disk on a server.
That's probably a topic for another day, because I know some companies who are involved in cryptographically securing comms. And they do some. Sebastian,
not recording. Not recording. You can't do that.
Sebastian, sorry, were you about to say something else there?
Yeah, I was wondering, isn't there a cryptocurrency that was explicitly designed to be private so that people wouldn't see the transactions as they occurred?
If I remember correctly, that's very much what Monero and Zcash are two that I'm aware of.
Monero, Zcash, and Dash. They are the three top ones.
That was it, yeah.
Well, Zcash is privacy by option. So, to be fair, from what I know, is people only consider like the OGs or whatever you want to call it in crypto. They don't really consider Dash and Thing to be private. Only consider Monero. But the problem with Monero is it doesn't have the liquidity that BTC has. So there's a notion that on the dark web everyone uses Monero. It's actually not true, because Monero doesn't have the liquidity. Like if you want to offload a few million of Monero, it's not the same as offloading a few millions in BTC. And those are the kind of guys that would use it, not the kind of guys that just doing a few $1,000s. When you do a big transaction where in the dark web or wherever it is, or drugs or whatever, you're not doing a few $1,000s worth of trades. You're actually doing like in the $500 million minimum, and that's where liquidity comes in. And Monero might be more private than BTC, but it doesn't have the liquidity, and so that's just what it is. Most of it still happens in Bitcoin. I've spoken to a few people that work for like regulators or FCA and all that, and they say like they predominantly see people using BTC as a privacy coin, because that's where the volume is, and that's where majority accept BTC. They don't really accept Monero like that.
I think it's a little bit like using certain security software as well, that the very fact that you're using it kind of makes there a bit of a red flag for some people to go, oh, why are they using Tor or whatever, even if again it's totally legitimate. So okay, it's certainly an interesting thing, definitely. So Elaine, go on, sir.
Yeah, I just wanted to say from a mathematical perspective, these zero knowledge proofs are wonderfully elegant. The idea that you can convert arbitrary processes into just big long polynomials. And of course, nobody has a right over a specific equation any more so than anyone else. It's something that anyone can verify and send you the results. And I think that's just such an incredible feat of engineering.
And again, offering a view on what zero knowledge proof means. So you might see ZKP or ZKP if you're not in the States, I guess. So zero knowledge proof is the mathematical means by which you prove you know the answer to something without divulging the answer, which sounds a bit kind of weird, but it's a way of cryptographically proving that you know the answer to something. So that question might be something like, am I old enough to drink alcohol? You don't need my date of birth. You just need to know that I'm old enough, and be able to include in that answer in some way something that is provable to show that I'm old enough type thing. And zero knowledge proof, really interesting area, which I think we're going to see a lot more of in the near future, Sebastian. I think you're right on that. Aziz, were you going to add something on that?
Yeah, literally before Sebastian was mentioning about zero knowledge, because I think the reason why I mentioned it is because you were talking about how you can prove, like how when you go to a supermarket you don't have to prove how much you got, but the supermarket assumes you have enough money, right? And obviously if you don't have enough money, the transaction will bounce. But yeah, like I just wanted to add like zero knowledge technology because I've been researching some of these new protocols. So there's new projects called Starkware and ZK Sync that actually using, obviously there's different kind of scaling technologies for Ethereum, but Starkware, Vitalik himself invested in it, and it's a huge protocol. The last round they raised that $8 billion valuation, and that technology is not it's not a fad. It's actually very interesting technology. I think one of the other examples you can give explaining it to people is that the Where's Wally, that book. So, for example, if I want to prove to someone that I know where Wally is, if I just show him on the book, the other person would know where he is also. But if I get a big paper and I cover the book and I put a little circle on it and I just show him that Wally's there, the other person would know that I know where he is, but it wouldn't disclose where he is. So that's like what zero knowledge proof is. And so it's a privacy technology and it's a scaling technology. So it's actually a big deal. Yeah, it really is a big deal. And I think like in the future, we'll see so many projects. We might even get like a zero knowledge kind of hype or trend in the market, like how we saw AI recently or whatever. But obviously Mina is in that industry, and we're going to see ZK Sync and Starkware launch as well. But yeah, and honestly, very good technology that. And I just want to say one other thing about, I think someone talked about like CZ or like these guys, they comply. I think sometimes like they have no choice. I think they're genuinely good people. Like if it was actually up to them and they didn't have any repercussions, then they will choose not to comply. But they have no choice. Like they actually have no choice because they don't want to lose their business, because they're thinking, yeah, I comply with this, but I can benefit a lot of other people. It's like, you got to make some sacrifices sometimes. And I'm not saying anyone was accusing anyone of anything, but I'm just saying, like, I think they're genuinely good people. Like even Brian Armstrong of Coinbase, yeah, they've done a lot of things, and if the regulators ask, but these things they have to do, otherwise they lose their businesses. I think they're genuinely good people, and that's why they got into crypto in the first place. And now we saw recently them launching layer 2, and they have their plan on how to scale. They've done so much for crypto, and that's why I sometimes see people like dunking on these people, like these CEOs, and I'm thinking it's very hard to build these things. I literally try to build a startup, you realize how hard it is, and these people have done so much for the industry, like CZ and Brian Armstrong and stuff. So I just think like they're genuinely good people, but it's just sometimes it's out of their control or they're going to lose their business. So, they have to comply.
I think that's a really good point. And it's where sometimes I have the conversation with people like there's a difference between ethics and law. And sometimes something that might be ethical may not be legal. And you have to be very careful because because only one of those is going to send you to prison, and it's not the ethical one. So yeah, you're absolutely right on that.
Yeah, I wonder what they're gonna do about ZK as well, because as is right, I mean, I was at Starkware conference like 3 weeks ago in Israel, Tel Aviv, and met the founders and so on. And these guys are really up there, man. This is the future of the technology. Yeah, most people gonna actually, as it is now, I think valuation now is about 15 billion already. And Starknet is not live yet, so. Wow. I mean, governments invested in it, Google invested in them. I mean, it's crazy. Everybody's crazy because one of the founders is the guy, really the inventor of ZK Snarks and so on. So these are really top guys, in terms of cryptography. So I urge everyone to look at that.
Yeah, him and the CEO of Algo as well. I think they're co-creators of ZK technology. So what's his name? I forgot his name. Marcio Soleimani or something. Him and the thing they co-created ZK.
Silvio. Yeah. Silvio Micoli or something like that. I can't remember.
The Algorand founder, yeah.
So I mean, these guys are really. When you talk about ZK, we're talking about something really that is going to change quite a lot. We're going to use blockchain, and encryption is going to be quite strong and improve security as well. Now, in terms of privacy, it's going to be phenomenal. But then, I wouldn't know. I think a lot of governments at the moment are shaking a little bit crypto because they know it's evolving and it's evolving fast, and it's going to stop a lot of the things that they are doing in terms of security and privacy, you know? You're going to stop them from basically, if these founders build things correct and all the apps start to be built around these new technologies, that you can expect they're going to lose a lot of the capability in terms of monitoring people and, you know, intercepting communications, all of that. So they are shaking a little bit, you know? You know what I mean?
And I guess the general consensus as well is that that's why the banks are looking at central bank digital currencies, which kind of gives them the visibility of transactions and activity in that.
Absolutely.
Definitely a thing. Just conscious, go on, Aziz, carry on.
Yeah, no, I was just going to say, like, sometimes, like, when I talk to my banker friends and they're like, oh yeah, what's the crypto going to get shut down? And I just tell them, like, listen, there's technology even before Bitcoin that wasn't shut down because it can't be shut down, aka torrents, right? The government still can't shut this technology down, and it's because the way it works. Like, people always try to say, yeah, the government they can't actually shut torrents down. They've tried. I don't even know, but there's this whole thing called SOPA. I think it was called SOPA, where they tried to get Hollywood industry to basically ban all these websites that allowed you to torrent films and whatnot. Obviously, I'm not advocating for illegal download, whatnot, but I'm just saying the technology, the base layer technology, it actually can't be shut down even by the government. Even the US government cannot shut it down. They've gone after certain websites, but the technology hasn't been shut down. For example, they went after Mega Upload and Kim.com, right? But he doesn't own the technology. He was just one of the websites that were hosting some of these files, right? The actual technology, torrents, you can download books, you can download movies. This actual technology, even the government cannot shut down. Like, I think people think like the government is God. Like, the government is not God. Like, they still think that they can't do nothing about, right? Because that's just the way the technology works. And this is why decentralization is so important in crypto, because the more decentralized a token is or a project is, the harder it is for, you know, someone to shut it down. So I just wanted to say that because some people think like, yeah, government can come and flip a switch and that's it, Bitcoin is turned off. That's not how this technology works. Maybe in the early days, like 8, 9, 10 years ago when Bitcoin was new, they could have brought a lot of the supply out. They could have done things when the hash rate was low. Now, try doing that now. It's a different ballgame. Try doing that with BTC or ETH now. It's a different ballgame.
Well, I guess that's where it comes back to what I've said for a while. You can't regulate the technology, but you can regulate the on-ramps and off-ramps to it.
I was going to say that, Gary, you know, and that's for example, what's happening at the moment is they try to go after the off-ramps. You shut down the off-ramp, you know, you're going to affect a lot of people. Like, I think it was today, Bybit announced that they cannot accept any more on-ramp for bank transfers, on and off. Yeah, bank transfers. It's just today. Anything with there is a bank. You can with credit card at the moment, but you know, I don't know why they did that. They say one of their partners cannot facilitate that.
Oh yeah, my current account provider also recently imposed a limit on cryptocurrency transactions, and it's certainly not going to be relevant for me. But if I was using it for, you know, proper investments, that really would be quite crippling.
So again, in the spirit of educating anyone who may be watching this afterwards or is listening and thinks, what's an on-ramp or an off-ramp? Think of it simply in terms of, we've got this cryptocurrency ecosystem of all these different cryptocurrencies, tokens, and this kind of thing, which is different from the traditional financial services world. An on-ramp or an off-ramp is something that connects you to that. So if you've got a bank account which has got pounds in it, or dollars or euros, and you want to buy Bitcoin, for example, which I think I've got here, you need an ability to send GBP, so British pounds, to an exchange, which will allow you to buy Bitcoin. That's the on-ramp part of where you're actually buying a cryptocurrency. So you're converting from fiat, like pounds or dollars or whatever, into crypto. And then when you convert it back again, if you convert it back into pounds, that's the off-ramp. So you may hear this term on-ramp and off-ramp. It's simply when you're switching from the fiat traditional money world to the crypto world and back. And that's where what many of you will have discovered over the last few years, certainly in the UK, is that it has become harder and harder to get your bank accounts to actually allow you to buy crypto or to sell crypto because it red flags all the time and says that this is a suspicious transaction, because they've got a list of who owns which accounts, so which are Binance, which Coinbase, and so on. Aziz, go for it. You've got your hand up, but you are on mute.
I just want to quickly say one of my mates actually had issues trying to offload or off ramp. I forgot what bank he was using, but he told me he made an account with a Chase, the JP Morgan Chase. They're actually in the UK as well. I didn't actually know. And they were very easy to like off ramp to and stuff, quite crypto friendly. I don't know. I haven't personally used it. I'm just saying for friendly worked out quite well. So just
so there's two banks actually quite good as is, for that. Americans, which one of them is that one and the other one is Citi. Someone that I know as well has lots. It's a big miner, big miner. I mean, he offloaded, I'm talking about a lot of millions, and it was Citi, no problem at all. In 24 hours, done. Any UK bank, Gary, it's a nightmare, absolutely nightmare, especially on ramp, yeah? Off ramp, quite a few are still open, they just want the money in, so getting the money out is a bit more harder, so then they started with the on-ramp, and now they're going after the off-ramp, because if you cripple that a little bit as well, then it starts to create problems for a lot of people in moving liquidity,
And exactly as Sebastian says, that some banks are now imposing limits on how much they will allow you to transact in some way. And it may vary from bank to bank. And I think there's even a couple who are imposing minimum limits. And I seem to remember the minimum limit for certainly at least one US bank is something like $100,000 as a minimum transaction. So what that does is it prevents a lot of your retail side of the business. So consumers, probably several people on this call here, who probably don't trade in several hundred thousands of dollars all the time. So it kind of wipes them out from there. I'm conscious we've only got 10 minutes left. So I just wanted to throw it out there. If anyone's got any questions or things they'd like to share, Elena, go for it. I see you came off mute there.
Thank you. Yeah, I do have a little question. So earlier we were speaking about how if an owner of 50,000 Bitcoin sends some Bitcoins to Gary, the owner would be worried that it would be possible to see the amount of Bitcoins in their wallet. So I'm just curious, if I send any Bitcoin to anyone, what exact information will my recipient be able to uncover about me?
So all they will be able to see is the wallet address that was used in the transaction. But by having that wallet address, they can then see every other transaction that has ever been involved in that wallet address. So if you go on to what's known as a Bitcoin Explorer, which I'm just trying to pull one up as we're talking, in fact, then you can actually see all the basic blockchain has is about 6 pieces of information. It's got a unique identifier, it's got a date and time stamp, it's got a from address, it's got a to address, it's got what the unit of amount was, so in this case Bitcoin usually, and how much. So it's only 6 pieces of information. But from those 6 pieces of information, certainly the address, it means you can then go and look and see what other activities have been against that address. Does that make sense?
Yes, it does. So the recipient will be able to see my wallet address. And then if by any chance they would be able to link the address to the name of the owner, then this is the way they would be able to establish their identity.
Exactly. So I'm just pulling up, I've not actually looked at the Blockchain.com's Explorer for a while, it's changed a little bit. But here is the Bitcoin blockchain live. So this is just taking a look at a message, has the block number 12345, I happen to do at random. And we can see in it that there was a transaction, there was a block reward. So that was, when the block was created. So this went to a miner. It was a single transaction. This was in the early days of Bitcoin, and it went to this address. Can you see 18x6RF,
Yes.
blah, blah, blah?
Yeah.
Well, if I click on that, you can see 50 Bitcoin went to it. And we can then see that what then happened to that is here's that 50 Bitcoin that came in here, and it got transmitted out to all of these addresses. So if I happen to know that address that we looked at a minute ago, the wherever it was now, 18x6 blah, 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 if we happen to know the owner of that address, if we say it was a particular Bitcoin miner, for example, so we know that had that 50 Bitcoin, it then went out to all these addresses. So we can certainly look forward and see where that Bitcoin has gone to, and we can then drill into each of those addresses, and then we can see what other transactions there have been to that address. So these are all transactions again. And as I said before, all the Bitcoin blockchain says is here's an identifier, here's a date and timestamp, here's a unit of measure, which is BTC, and this is how many went. So we can build up, and there are products that allow ways of tracking and tracing that. So Sebastian, you've got a question.
Thank you. Those addresses that you showed on the Bitcoin Explorer look suspiciously human readable. Do you know what's going on there?
Yeah. So one of the obvious ones is that if you're using a certain type of split key, the name of which escapes me now, a multi-signature address, then they start with a certain digit to begin with. So you might notice there are quite a few which were 1BC something, I think it was. They're all machine readable, but they're pseudo-random because they're just wallet addresses. At that point, you don't know that address 18x blah, blah, blah is Gary. But if you can work that out, as Elena says, if you send some crypto to me or receive some crypto from me, you've then got a way of identifying that is me with that wallet. So, Aziz, are you going to add something there?
No, yeah, I think you just said it. I just wanted to say the actual protocol, like the way it's designed, is not to leak your information. It's actually private, but you got to go out your way to do something to connect your name. For example, if you send someone from that address, they know that you have the private key, or you don't use a VPN. So someone tracks your IP address, they know that this transaction somehow came from this IP address, they know where you live. Like the actual protocol is private. If you have to do something to connect your name to the address. Otherwise, if you actually take good privacy measures, like using a VPN and using a mixer to maybe send or have a different wallet, or if you do take your privacy measures, your name won't get attached to that address. It's just the protocol is actually baked to be private, but it's like you have to actually do something to connect your name to the address. Once that's done, then they can obviously connect, this address interacted with all these addresses, so maybe those addresses are his also, blah, 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 blah. But if you don't connect your name with any address, like you buy crypto, even OTC, like over the counter, or buy with someone, like you buy it for cash, your name is not going to be on any database because you didn't buy it for Coinbase and give you details.
There's only one way to do that, yeah? The first time you do an off-ramp, yeah, that's it. Because to do off-ramp, you need to do KYC. It doesn't matter if it is an exchange, crypto.com, you have a card. As long as you're doing an off-ramp to a credit card, to a debit card, to a bank account, or whatever, that's it. You're identified and everything is connected then. If you just stay in crypto all the time without using cards or anything, then yes, they will never be able to identify you.
That's the thing. Yeah. I just want to quickly say, like, even sorry, go ahead.
Always going to offer, and just like I don't say this is not financial, legal, taxation advice, it's also not criminal money laundering advice. But if it is a purely cash basis, so you do get a situation where you can walk into a Starbucks. And you can buy with cash some crypto off somebody, and you can sell some crypto to somebody. Now that is full of its own risks, because you don't know if you're going to walk outside the Starbucks, and other coffee shops are available, blah, blah, blah. You don't know if you're going to get knocked on the head or something. then that is probably the only way of being truly anonymous in some way, unless you use a decentralized exchange that doesn't use any form of KYC checking or whatever. But as is very quickly that you're going to add something on that thing.
Yeah, no, I just want to say, even when you're off-ramping, there's ways you can off-ramp to cash, and then obviously that cash you can gradually move in. But I think a lot of the reason why people don't want to do the whole KYC thing is because of tax. But that's the thing. It all depends on how much you're trying to withdraw. If you're trying to withdraw 5, 10K, probably doesn't matter. If you're withdrawing 100K or million, it might be worth doing something in Dubai or another country. It all depends on how much you're actually trying to withdraw. That's all.
The simple recommendation I always offer is pay your taxes. Be legal, don't break the law.
Or go to countries where the tax is zero.
Well, yeah, that's a very good point. Folks, we're pretty much on the hour there. So I was going to close off at that point, particularly because I don't want to knock on my door from anybody suggesting I might be recommending ways of getting around various things. But thank you everyone for coming along today. Jag, so bye-bye, good to see you again. But yeah, hope everyone enjoyed this. Hope it was worthwhile coming along. Thanks everyone for the input and the comments and there. Hopefully see you again sometime. And for those who are watching on YouTube, click subscribe, like, blah, blah, blah type thing. Have a great one, folks.
All right, bye.
Bye all.